think you'll see also that our platform is very simple. It's black and white. And the idea shifted from communicating to this very, sub-niche asset class to stretching across the private market. And all we need to do it well is to build.
People usually don't consider network effects as much, but once it starts rolling, it's a snowball.
And that fits into our vision as well. But the beauty is that the network effects, when you start to see them, are on both sides. My key advice is leverage your network and your network's network, because we're all connected in one way or another. Keep the momentum going. Don't let it die off. Be ready to answer anything. And if you get a special question, prepare it and turn it around very quickly. Investors really appreciate that. And your preparedness shows confidence in your business, and it reflects how you run your business.
So Zuhair, Zest Equity has had quite a journey. I remember Zest Equity a few years ago when I was thinking about my startup, where I had a very heavy cap table, wanted to trim it down. I came across Zest Equity, but I believe a lot has changed since then. We were looking at secondary markets then, but now you're into alternative markets, digital infrastructure, and much more. So would love to hear the journey so far.
Yeah, definitely. Where do I start? Listen, the original premise of what we were trying to solve for was, and it's not what we do today, the original and only premise of what we were trying to solve for was creating liquidity in private markets.
Okay.
More specifically back then, VC. Okay, it came out of a need for me. I had recently left my role co-running a tourism-based fund that we launched before COVID and shut down during COVID. And so I was looking to buy myself some time and thought, well, some liquidity from my angel tickets would be helpful, right? That's when I started to talk to my co-founder, Rawan, who is my friend since the 5th grade, right?
Yes, right.
And it's and we discussed the topic, and we thought, yeah, this is a great thing to chase. Obviously, I think every ex-banker or someone in M&A would think this is also a great topic to chase, and it is. It's just a really hard problem to solve. And so that's the premise that we had started on, was creating liquidity in VC, right? But we very quickly realized, after we sort of built this MVP and the sort of legal infrastructure to marry with this MVP, is that the market, not that it wasn't ready, is that we actually need to build more infrastructure before you're able to enable liquidity, right? And liquidity, I don't think, will be in the form of, and it is not in the West, in the form of buying and selling shares like as if you're on the stock exchange. No, right? But just at least enabling liquidity events. And so what started out as this marketplace idea very quickly evolved into enabling our clients to digitize their transactions and group their participants to execute their pre-agreed deal digitally. And it's, the value add from that is that if you wanted to do something like this alone, if you're a founder raising, and that's the simplest example here, but you could be a fund, you could be a large corporate, but if you're a founder raising from your friends and family, if you wanted to group them into a legal vehicle, you would have to go to a lawyer. You would have to go to a KYC provider. You would have to open a bank account. You would have to also lead the transaction and deal and run your business, right?
Yes.
And amongst other things, like annual filings and requirements and so on and so forth. What Zest does is that brings that all together, except running your business under one roof, right? And enables you to execute or digitize this pre-agreed transaction with the many participants that you have privately. In a turnkey solution. And so that's how we evolved from the idea of secondary marketplace, which never really kind of launched or took off per se, although we spoke a lot about it, through to this today digital infrastructure, and the first product is this vehicle or SPV infrastructure.
Okay.
To now our vision being, well, actually we're shaping the future of private markets and we're building the pipes for private market transactions to take place. And we see that up to deals worth up to $100 million, these are underserved in our markets today. And there's a lot of low-hanging fruit where we could go and help clientele in digitizing processes and obviously taking away manual work so that they can focus on executing their deal, whilst populating a document can be digitized, or providing the funding rails in a compliant manner can be provided. And so there's a lot there in the private market space that we could solve for. And so that's where our vision is, right? We're a digital first compliant private market solutions platform, whereby our clients can step into our ecosystem, select the services that they want, and press play and execute their deal, no matter how complex.
Yeah, great. And just to understand this a bit further, the end customer profile, has that also evolved with the product?
Yeah, it's funny because again, we started by saying in the VC space.
Yes.
Right. And whilst, yes, we've built a lot of our track record there, our customer base or our client base has expanded beyond that, right? We've got, obviously founders, but then we also have fund managers.
Okay.
We have entities or businesses. We have family offices. We can serve anyone and everyone, and we can digitize processes for, in the range of $1 to $20 million we've seen. Obviously, we can go larger, but when you automate, you have to standardize, and when you standardize, you can't do a bespoke deal, and that's why we say beyond the $100 million mark, you have bespoke bankers, lawyers, and so on and so forth.
So this has also increased your ceiling for your market size?
Yes. Yeah, definitely. Yeah.
Okay.
Yeah, it's really how Stripe is for payments, Zest is for private market transactions, right? Yeah.
Yeah, that's a cool line.
Yeah, I learned it recently, so I'm going to keep using it.
The tagline.
It's good. Yeah.
That's the tagline.
It's like when everyone was like, it's the Uber for.
Yeah, exactly.
It's the Netflix of,
Yeah.
So you guys raised $3.8 million in your seed round. That's not typical. That's quite incredible. How'd you do that?
I mean, if I'm honest, I think it's more or less in line with what you see for this region.
Okay.
Because the cost to PMF is relatively high, especially in a financially, like in something, in the space that we're running in, right, in fintech.
Right.
Now, we were in the right place at the right time to attract the right people to be able to execute on a $3.8 million seed round.
Interesting.
Okay. There was no secret sauce. It was a lot of hard work, right?
Yes.
You start your fundraising journey by having a list of targets. We've had people from our pre-seed, we reached out to them as well. We had also test clients of the platform who reached out to as well. Those were funds as well, right?
Okay.
And so we cast a wide net, and we sent out the initial kind of, hey, are you interested? And then we started to get some replies, but some not. And then you follow up, and you follow up, and you follow up. And then that funnel goes from a large funnel all the way to the 3 or 4 investors that you land on.
Okay.
Yeah.
And that's where you complete the transaction.
So there's a lot of groundwork before the round even starts.
Absolutely. You have to be prepared, right? And there were some learnings there for our pre-A, right? To be announced soon. But I think, keeping momentum is very, very important. And back then, the preparation was, you need to have your data room ready, right?
Yes.
You need to have your numbers correct. You need to know your numbers as well,
Yeah,
right? Your deck, you need to have a 5-minute, 10-minute, 30-minute, 1-hour pitch as well, right?
1 hour.
And you need to know who your,
Yes.
well, not 1-hour pitch, but DD session.
Sure.
And it took a lot of time, more time than I would have wanted to close that first deal. Part in fault because, so it took us about I would say from the term sheet to closing was 7 months.
From term sheet to closing.
From term sheet to closing.
Wow.
Yeah, it took a long time. Yeah, and in part there was summer in between, kind of things slowed
Yes.
down. Okay, so take out a month.
Yes.
Right.
People listening outside the region won't get that.
No.
Summer? So what?
Yeah, exactly. But also in part, I came from a very heavy M&A background where the deals I was doing would take 12 to 18 months. But these are mega deals, right? $250 million and above.
Got it.
So coming into this, I came with that mindset.
Yeah.
I was really wrong, right? And so instead of, and we worked towards it, and obviously we pushed towards the finish line, but we didn't keep the momentum per se, but also for some reason we were a bit more relaxed than we should have been, right?
Okay.
It took some time, and also obviously you would negotiate, and as a first-time founder, you want to negotiate, but also what is your negotiating
There's no
power?
bargaining power in the
Is there a
startup,
bargaining
yeah.
power?
Yeah.
And you think maybe as a first-time founder, you think, no, I don't. But what I learned is that no, you really do. Okay. It's just, you really do. And in a
it's
sense,
easier in the seed round than this pre-A. Because usually with what I understand is the seed round, you have limited information.
Yeah.
And you're then perhaps extrapolating the market size, revenue.
Sure. Yeah, and I think in the pre-seed, there's a bit more ambiguity. And so
Yes.
you can sell the vision more.
Yeah.
Seed is a balance.
Yes.
And then you go into the A and the B and then show your track record.
Yes.
Okay.
True.
But when you hold the vision, you're really confident in your product, it comes across.
Yeah.
Okay. Yeah.
Okay. And also, if you think that a certain term is not suitable to you, say no,
Yeah.
and you'll get respect. Okay.
Okay.
And it's not like the VC will run away. They'll negotiate.
Yeah. Yeah.
And so when I say you really do have power, you really do have the ability to say no and see what happens.
How did you learn that? Was there an experience that taught you that?
I have the best legal counsel I can wish for.
Okay.
But also I learned that through that 8-month process. Okay. Because and there were some topics in this negotiation, and mind you, by the way, a seed round should not take this long.
Yes.
Okay. And also you should focus on launching the business, right?
Right.
Which is
Because it distracts you at a certain point.
it does, but you need it. Right?
Yes.
And so we what do you say? We dug our heels in the grass, I think. Yeah.
Yeah.
And said no, right? And so some of the things I thought, they wouldn't give up. We're giving up,
Yeah.
Okay.
Yeah. So and that taught me a lot, right? That taught me a lot.
Everything's negotiable, right?
Everything is negotiable.
Yeah.
Yeah, exactly. And the beauty is if you're aligned with the counterpart or with your new partner, that you're in this for a partnership,
Yeah.
then nothing else matters.
Yeah.
Right? And so taking a long time to negotiate this or to close this, let's put it, right?
Yes.
And let's say you need to buy also another 1 or 2 months to do your structuring and all of this stuff, right? It takes time. Just knowing that the partner that you're partnering with is the right one will just keep you both aligned throughout that journey. And that's what we had, at least, right?
Nice.
Okay.
And so that was really helpful.
With the evolution of Zest, the strategy may have changed, the positioning may have changed. What are the key shifts that you guys have had to navigate through over that time?
Number one, we are not a marketplace. Okay.
Let's say.
Yeah.
Yeah.
And it's harder to explain than we thought, right? If you're just pipes to transact and we're not a marketplace, we were never, never were, even though we may have intended to be. It changes the business model, right? We're a platform to enable clients to execute their pre-agreed transactions and digitize them per se, right? And so we're a platform that provides tools to technically one client and their participants, right?
Okay.
Their participants are not our clients, although they are, but they are not, right? They are just being put through a process to consummate our client's transaction, right?
Sure. Okay.
And so whilst we make sure that they're taken care of and everything is executed in the best practice manner, the client who's leading the transaction. That's what we call our client, and we cater to them, and that's shifted and evolved our thinking and our model and our communication.
Yes.
Okay, and that's quite important to sort of put out there, and our vision and our product offering, because now we're thinking, what are the solutions we have to our deal leads as opposed to the participants,
Right.
and that's that's probably one of the biggest shifts that we've had to think about. Also with the evolution is going from a VC focused play to a private markets agnostic play. The messaging changes, the type of clientele that you're addressing changes. You're more professional in what you're communicating. You have to build that trust layer across the board, and that comes with a change in persona of the business.
Okay.
Which was also quite interesting to see.
And to communicate this, the channels that you'll be using, because I understand it is a B2B play in with this. So
or B2B2C.
B2B2C rather. Did you have to change your approach? Because initially it was a different customer profile. Now you have a wider market, and you have corporations, you have family offices. So did you change your business development / marketing approach?
Yes. Yeah,
Any
and
tips
simply
there?
yes.
Yeah.
So it's interesting to think about it now. Even if you think about our color schemes and who we are, right?
Okay.
We started with more, how can I put this? Like approachable. We're still approachable. We started with a more fun, I would say a fun color scheme. I think the team that we had was focused on VC only or these conferences. The type of language we used to use was also more catered to VC.
Okay. Okay.
And to founders, right? And then what we saw, the shift, and the shift is not easy, but the shift is now, for example, the BD team is very well versed in like pretty sophisticated terms or can speak to, that's the beauty of our team, to a family office, but also to a founder, right? And so we widened the scope as opposed to evolved away. Sorry. I think you'll see also that our platform is very simple. It's black and white, and the ability and the idea shifted from communicating to this very, sub-niche asset class to stretching across the private market. And all we need to do it well is to build trust. And to build trust, you need to be able to communicate to these different personas effectively. Yeah. Trust is number one, I think.
Trust is number one. And of course, there might be some network effects which also come into play here.
Yeah.
So did that also play a crucial role?
100%. 100%.
People usually don't consider network effects as much, but once it starts rolling, it's a snowball.
The beauty is, and that fits into our vision as well, but the beauty is that the network effects, when you start to see them, are on both sides. So on the client side, where you may have used this as service to digitize your transaction, and you'll tell your friends. Yeah. And your friends will be in a conversation with someone else, and they'll tell their other friend who's looking for a similar provider, and suddenly we've got that warm lead, right? And that conversion rate's quite high. Yeah. And so you see that flywheel effect starting to take more and more of a life of its own currently right now. But also the beauty is that people we don't talk about, but we see, is that on the flip side, if your participants are registered on the platform, right, and they have completed a transaction for you, then our vision is in 5 years' time, 80% of the private market LPs in the region will also be on the platform. And so when that conversation happens again, and that person registers and launches their transaction, maybe 80% of their LPs are already on the platform.
Okay.
And so that reduces friction and creates that flywheel. So that's been our thinking so far. You got to chip away to get there, but that flywheel is very hard to turn. But once it gets going, it really does fly. Yeah.
And geographically, you are not limited to just UAE, Saudi Arabia, but you're looking further beyond, or already you have footprints there?
So our thinking is definitely emerging markets, or this new cool term called the global south. There are specific markets. The markets have to fit what we're after. Yes, GCC is a great market, but effectively, and we think of ourselves as an emerging markets play. But there's certain attributes in a market that need to fit. For us, ideally, they transact in a certain currency. They transact offshore, as we do here. The ecosystem transacts out of DIFC, ADGM, Cayman, BVI, and so on and so forth, right? And so you want to find other ecosystems that kind of match that. That makes it easier for us to get into the market and launch very quickly. Now, obviously, we can adapt, but that thinking is where probably would go next, and then we'll take it from there.
Yeah, so you mentioned the Cayman Islands, which is where you've got some of the business set up, right? What are the vehicles that you're using, like that the Cayman Islands provides?
So the structure as it is set up, the Cayman Islands is probably one of the most tried and tested jurisdictions for offshore like transacting and corporation companies, holding companies, SPVs, and so on and so forth. And even in my previous lifetime, it was a very standard jurisdiction to use. Okay? Today, more so, you start to look at something more local like ADGM, and those are of interest to us as well. But if you go into the Cayman Islands and you think about it, it's not specific to the Cayman Islands, but I'll talk about general infrastructure. You've got independent SPVs, right, which are independent entities that you can set up and you can use in different ways, right? But usually they're most suited to group many participants into this SPV and or used for structuring. And then you can use what are called umbrella structures. Umbrella structures such as segregated portfolio companies, or even in Delaware, they're called serial Delaware LLCs, which is what AngelList uses, right? These are larger umbrella structures with independent cells, and these cells act as mini SPVs per se, right? And those are more effective and efficient. And then there's other structures as well, but sort of these are the two most popular that you would generally see effectively.
Sure. So one question that I would like to ask you is, as you might be already well versed, and it's technical, the subject. So one stretch of clients would understand this, for example, the VCs, the PE firms, and family offices. The other ones would be founders, because when I realized that secondaries could take place, where in order to trim the cap table that I was thinking of with my startup then, I had to educate myself a lot, right? And let's say in your initial process of Zest Equity, you had to go through a phase where you had to educate the customers a lot, but now because these people understand the work that you're doing already, so is it easier to acquire these customers now?
Yeah, and it'll be easier in a year's time and in 2 years' time. Listen, we focus a lot on education, and so we push out educational material once a month. Full-blown, well-thought-out resources for anyone who wants to go read about, from cap table simplification thoughts to through to what is an LBO. So we're really pushing out these educational materials, and what was much more difficult in 2022 is much easier now, or maybe we're better at communicating it. And to answer your question, you don't have to execute a secondary to simplify your cap table. You can just bring those, technically you're taking those participants and rolling them into an SPV. And so whilst technically it could look like a secondary, but it's really not, because it's still them who's holding the underlying unit.
True.
But from a marketing perspective, you've got this big, let's call it like thought leadership piece that you're publishing. It's kind of a big ask to ask someone to like read through all of that. Maybe it's a 20-minute read or something. What else are you throwing in the marketing mix to get people enticed to want to read through that education piece?
We put a TLDR at top, but
Nice.
we do snippets as well through our social media posts also. And we're now also starting to do things like this, right, to help educate the market.
Okay.
More and more talks, events, and so on and so forth. Yeah.
With respect to founders thinking of expanding to markets, so of course start with UAE because that's where most of the founders reside who are listening. But then moving to, let's say, Saudi Arabia or moving to other geographies, you have that experience to kind of discuss that what investors or let's say the go-to-market strategy might look for these countries. It's a question that I would like to ask, but if it's complicated, then we can scrap it.
I don't think I'm the best suited because my model is kind of like we could do everything from here, so it's not fair to the founders.
Got it.
You know, yeah, I think so.
Within our community, everyone is like really interested in funding, receiving funding. Truth be told, a lot of our startups are like very, very early stage. So they're even probably looking at like pre-seed or seed.
Yeah.
But given your experience, which is why I asked the question before about like how did you do it, I think I'd like to go more into like how you did it or like what advice you'd give to them maybe.
Yeah.
And even considering, you know, your platform also like facilitates that. I think you're the perfect sort of like person to really share on that.
Digitizes that. Yeah.
Digitize that, yeah. But I mean, share your knowledge as well.
Okay, so for anyone looking to fundraise, I think in our journey, what I've realized is if you have an idea, you truly believe in it, okay, then you can, if you go out to market and you rely on your first lead, then that first lead is going to say yes or no, but ask them for the next lead, and you're slowly going to be able to open these doors yourself. It's really up to you. No one is going to come and help you as a founder as much as you think. Other founders will help you, right? And they'll connect you. And that's what I mean by one lead to the next lead to the next lead, and try to exhaust your network, because there's a large ecosystem of investors out there. And if your idea is decent and has a fit, and you truly believe in it and you can explain it well, then you will be able to find the investors that you want and need. Okay. Now, going back to how would you go about doing that, the way we did it is friends and family, angels at the start, right? Smaller checks. We didn't have a Zest to help us, right? And so we just picked up these checks one by one. And then we used that as a benchmark to go to our first institution, then built the MVP and had the traction. Then we did seed, so pre-seed, seed, and then pre-A. And then I know I touched on that the seed was quite long-winded, but a pre-seed shouldn't take you that much time. Raise using safe notes.
Yes.
Yeah, that's what we did, right? Obviously, each founder has their own journey, but generally that's what we're seeing more so. And that's a quick one, right? And so you can basically, you're interested, send you, sign, execute, wire the money, you know?
Right.
So that's kind of the thinking that's there. Exhaust all your leads. There's always someone out there. And then as you go through your fundraising journey, learn from your previous pitch, what you did wrong, what you did well, take notes, and evolve your language. Because you're doing this for the first time. In your head, it might sound good. To your friends and family, it might sound great. But no, you need to know what people are looking for. And speak to other founders, maybe pitch to them and see what they think, right? That could be helpful as well. Or your friend who works in a VC. And then now what I would think is the best practice is also to try and keep your cap table simple,
Yes.
The reason why is that if you raise from 30 friends and family and angels at your pre-seed, when it comes time for your first institutional to come on board, and at that moment in time, you will end up having maybe 3 institutionals and these 30 investors and then a couple of co-founders. And you may end up with, let's say, around 45 participants on your cap table.
Yes.
That is a messy cap table. The 30 participants that you had, each with smaller checks, maybe sub $100,000, sub maybe 10, are there to support you and give you and also ride the economic upside.
Yes.
Correct?
Yes.
A certain major change in your business, or 45, and having 45 signatures and chasing 45 signatures is very tedious.
Yeah.
Right? With rolling these friends and family and angels into a vehicle, suddenly you have, let's say you had 45, 30 were angels, suddenly you have 6 signatures to go after.
Okay. So will there be
That's
like
much
lead
easier.
investors from that cluster of participants? Or?
So it depends on what structure you use. You know, they could be rolled manually and they'll elect someone.
Okay.
Sometimes they can elect the founder to be the signatory. And the reality, again, goes back to the person who gave you $10,000 on day one and opened all the doors for you and supported you is now handing the keys over to the institutional round and the institutional investor to say, now you take it forward. My time is not done. I'll
Yes.
still open doors, right? But I'm here now to ride the economic upside. Like and so that's the way it should be treated. So you should not be seeking their signature every time you want to change auditor or something, right? It should, unless you want to, right? Yeah. And some participants, some key angels, you'd want to keep them on your cap table, right? They're big names.
Yes.
Yeah, and they're useful, and sure. But that's the kind of thinking. There's no one size fits all, but you need to think about what keeps your business nimble as you grow, because you're a founder and you have a million things to deal with every day.
Yes.
And the fact that your angel investor is in Cannes on holiday and can't be reached for a signature holding up your whole round should not be a topic that you should worry about.
Absolutely. We had a similar structure in our previous startup, and we were chasing after one angel investor who has multiple businesses, but he's not in the country, and we need his signature to change our bank account, and that's a mess.
Exactly.
Because all the transactions are taking place in that account.
Sure.
But if that account is going to be frozen, a lot of transactions will bounce, we will not receive the payments, and we had to wait 2 weeks, 3 weeks. And it's always there subconsciously. It affects your day-to-day work.
Absolutely.
Okay, that we need to work on this. But if there was something simpler, as you mentioned, that we don't need for the simple work, that's one of the angels to be a signatory there. The co-founder should be enough. But early days, we usually go with it, and it's a price we pay.
I mean, but obviously, like this same angel investor that helped you was there for you day one.
Absolutely,
you know?
and that's
their intentions are super great.
Exactly.
You know? But they have multiple businesses and they're busy as well, right?
Yeah.
As you have a business, and
True.
And so that's what this simpler cap table means, is that as long as everything is best practice and they are protected through and through for whatever it is, so as long as the setup is correct, they helped you on day one, they've handed over to the institutionals now, they're a supporter, they open doors, but if you want to open a bank account, you don't need their signature. And that's exactly what a simpler cap table is meant to help you with. Yeah.
Okay, for the listeners, they're always interested in the tips and tricks that are there for fundraising. So usually they have their own checklist. But if they have to have a universal checklist for them to consider meeting with investors, what would that be? Because in this region, there are only a limited amount of VCs you can reach out to. And sometimes you have to look outside the region to be an investor or an angel investor. Any tips on that? Because you've been through the pre-seed, seed, and very soon a new announcement.
My key advice is leverage your network and your network's network, because we're all connected in one way or another. Keep the momentum going. Don't let it die off. which also means, don't raise before Eid or before summer or before Christmas. Pick the right windows. Just like IPOs have windows, fundraising have windows. Be ready to answer anything, anytime, very quickly. And if you get a special question, prepare it and turn it around very quickly. Investors really appreciate that. And your preparedness shows confidence in your business and your ability to, and it reflects how you run your business. Okay. And I think these are the key 3 things that I've learned. And that enabled us to go from a longer, several month seed to a 6-week pre-A.
Wow. That's quick.
Yeah. And I'm really a true believer that you get an email at 11 p.m. Well, you know what? Try and reply by 11:30 if you can.
Yes.
Sure, if you're online, okay? Or at least the next morning, right? Keep it going. Keep it going, Own the process. Lead the process, try and hold it to yourself. If you can do that, and the investor sees that, it'll at least you'll get a quick yes or a quick no.
That's better.
Yeah. It's better than I'm not sure.
That's painstaking.
Yeah. So those are the key 3 things I think I'd like founders to focus on.
Awesome.
Thank you.
Thank you so much.
Thanks.
It's been a pleasure.
Yeah, it was a pleasure. Thanks for having me. Thank you.